Yes, welcome back to Trade Like Skills channel. In this video today, we are going to look at liquidity. Most of you guys have been asking me about liquidity, how to trade liquidity, what is liquidity, where do we find liquidity, and when to trade liquidity zones. So firstly, liquidity is money. That's the first thing I can tell you. So in this video, we are going to look at liquidity itself, where to find liquidity, and how to trade liquidity. But before we go to find this video, you can check the link in the description below or in the bio to join our free Telegram channel, in which you will find free trades every day, free signals, and also you can find free live trading, free YouTube live trading that we shall be starting soon as possible. So don't miss out, guys. Welcome to the winning team. And if you like my videos, you can tap the like button there, and then you tap on subscribe so that you can't miss more information that will be posted here on this channel. So let's go without wasting time. So firstly, liquidity is money. Liquidity mostly is referred to as money in trading. So which money do we talk about, and where do we find liquidity really? So firstly, liquidity is the stop losses that buyers or sellers are leaving behind. And anytime the market might come to sweep that liquidity or to take that money in order to gain momentum to go or to keep going to the direction that it has been going to, or to gain momentum, maybe to reverse, to change the direction where it has been going to. So for example, here in this market, it was an uptrending market, and we can see very well that the market was creating BOSs to the higher highs, breaking higher highs, going high. So this was a good clear view of the market going high or breaking high, showing us that now the market has turned into a bullish market. It's no longer bearish like this side. So what do we look at firstly before we trade liquidity? Before we trade liquidity, we look at the zones where the market will come in order to visit, so that it goes back to the direction that it is taking or it has chosen to take. So firstly, we can see that when the market was moving higher highs, breaking and creating a change of character. Why do I call this change of character? Firstly, this was our last BOS, our last break of structure to the lower low. And then when the market retested here, I think you can see this was our last order block, and then the market failed to break lower low. So broke this internal high and then created the first change of character or internal change of character. So when the market was moving high, it was breaking, going high into the higher zone. So if you can see very well, you can see that the market tried to come and reverse to this order block and then failed, but was leaving wicks here. These wicks are meant to be liquidity, and anytime the market might come to sweep that liquidity. So these wicks will be liquidity, and the market might come to take that liquidity. So we have to mark this as our liquidity. So anytime the market has to come sweep liquidity and then continues to the direction where it has been going. I'll show you the examples of trades that I've been taking, and then you will see that. So if we can see that the market has been moving, creating higher highs, let me see how I can explain this very well so that you guys can understand this. So we see that now this market has been in an uptrend, breaking high, retesting, breaking high, and then we come to a scenario where the market comes here, creates more moves inside, and then market comes to this zone, to this order block, then maybe changes character again from here, and then retests and then moves. I think you can see this. So this zone here, why was the market creating? This one was a trend line liquidity, inside trend line liquidity. So market was leaving more liquidity of buyers who are trying to push the market high, but instead the sellers were pushing market low and then were taken out. So buyers have been leaving their stop losses here down, and then the sellers could come and sweep away the liquidity or the stop losses. So that's how the stop losses are taken, or liquidity is taken in the market. So we are having this sell side liquidity and then buy side liquidity. Sell side liquidity is the liquidity that is low or below or in a sell zone, and then buy side liquidity is the liquidity that is waiting to be taken by the buyers or this side of the buying. So which liquidity do we have here? We're having sell side liquidity that was swept here, and then buy side liquidity that was taken by this move here. So the first thing is to identify the direction of the market. Where is the market really going? And then after understanding the market's direction, then you'll come for liquidity, and then you comfortably take that liquidity and continue with the direction of the market. So without wasting more time, let me show you this example here. We can see that now the market was breaking higher highs, creating BOSs, going to the higher side, and then the market was leaving liquidity behind. As you can see, all these are stop losses of buyers who tried to push the market, but again failed to break high. So this was our recent high, and it had created our buy side liquidity that is not yet taken out. That means that sellers entered from here, and then they left stop losses this side, thinking that the market will drop for good. And then also buyers who had entered from here entered and left stop losses here, thinking the market will buy for good. So anytime the market will come for this order block that is not yet mitigated. And if you want to watch videos about order blocks, you can check my recent videos that I've created. Then you'll check and see all that, guys, and see all that. I'm sure you will understand these things. And if you want to join our classes, you can firstly join our free Telegram channel. Then you contact me, and then you start learning these things. You get a great strategy that is going to be working you. Even if you are intraday trader, a beginner trader, a scalper, or a swing trader, you're going to make this work for you, I'm sure. So let's look at this. We are seeing liquidity here that is being left, and then anytime the market might come for that liquidity, and this order block has not been mitigated as yet. So what are we looking for? We are looking for the market to come into this order block, and then we take a buy entry and we target the last high or the buy side liquidity. So let's play this out and we see how it goes. We can see that this first liquidity was swept out by this wick. I think you can see this. So when the market swept out this liquidity, that doesn't mean that the market has really taken all the liquidity that has been left. No, we are still having more liquidity that is not yet swept out. You may ask, which liquidity is not yet swept out yet? Now, if we can see very well, we can see that there is liquidity. The last liquidity that we have here was this zone. So which means buyers again entered from here and left stop losses here. So this liquidity is not yet taken out. So anytime the market might come for this liquidity in order to sweep all the liquidity that has been left here so that the market can continue its direction. Market moves because of liquidity. Why? Because liquidity is money. If there is no money in the market, there is no movement in the market. I think we all know that for those ones who have been trading for some time. So let's look at this now. When we left with this liquidity, that means that the market has created also new liquidity, sell side liquidity, and we're waiting for this liquidity to be taken out, all of it. So let's play this out and we see how the market does it. Good. Now I think you can see all this liquidity has been taken out, even this one. This one has been also taken out, and I'm going to show you the examples of this trade that we took about this liquidity, and we made some good money with this entry. So when the market took the liquidity, we have to first wait for the confirmation, and then we take the entry maybe to buy. For our entry, we are only targeting the recent high, which is this higher high, and we are targeting the buy side liquidity because we are in an uptrend. We are breaking, going to the upper side. So I think you can see very well that the market now here created a change of character after sweeping liquidity, and then the market is retesting from here, and then someone can take a buy entry from that zone. This is a long position. This zone is a good zone to take a trade, and then you minimize your losses, and then you target the recent high, which is this one. So let's see how this market plays out in this zone. Let me make it small like this so that you can see it very tight. So this zone is a good zone to take a trade, and this trade we are only targeting 197 pips. So let's see what we're going to do with this entry. And then the market plays out like that. I think you can see how the market played out until the market hit all take profits. So that's how we trade liquidity, guys. Don't miss out more videos that are yet to come about liquidity and more explanation. We shall make also a liquidity video about selling liquidity when the market is in a downtrend. So I think you can see that we have taken up all the buy side liquidity. So this is when we took all the buy side liquidity. That's the example of the trades that we took of this entry. And I took 2 entries because I took this first liquidity buy. Not only that, we first took this sell. After market tapped into this zone, we took this sell, and then we took this buy up to here, and then we waited for this liquidity, all of it to be taken, and then we took this buy. So I think you can see the examples there. So don't miss out to join our free Telegram channel, and don't miss out to join the best family that is winning each and every day, guys. Let me see you there, guys. Thank you. Have a good time.